Circle Internet Group, ticker symbol CRCL, just reported earnings and the stock was up 6% here in the pre-market. I think at the open, the stock is up about 10%, and we are going to talk about Circle Internet Group, why the stock is up, and is it a buy right now? But before we dive in, guys, if you could please go ahead, like and subscribe. It really helps me out. Now, Circle Internet Group, operating as Circle, is a financial technology company focused on digital currencies and public blockchains. It's primarily known for issuing USD coin, a stable coin pegged to the US dollar. Circle provides the infrastructure and tools for businesses to utilize stable coins and the broader blockchain financial system. Now, the earnings were very mixed, missing on EPS estimates. As you can see right here, the market wanted 31 cents. Management came out, reported 43 cents, but smashing the revenue expectations with 53% growth on a year-over-year basis. Now, the RLDC margin, which is essentially just gross margins, actually fell mostly due to higher transaction expense with regards to operating the entire Circle ecosystem. Net income margin actually fell significantly. So last year, this company was actually net income positive. This year, it is net income negative, seeing a $482 million loss. That was largely attributed to the IPO expenses. They incurred like $500 million to actually have their initial public offering. However, when you look at the adjusted EBITDA margin, which is sort of what they give you to look at the health of the company, and I think it's a fairly good metric in my opinion, that went from 45 to 50%. So adjusted EBITDA margins increasing despite gross margins decreasing. So a lot of operating leverage being built here. And you're looking at an adjusted EBITDA of 126 million, up from 82 million. That's a nearly 50% increase from the same year prior. The company's balance sheet, net of customer balances, is at $1.1 billion, very healthy. They have virtually no debt. They actually decreased their debt. They had $53 million in debt last year and now have 11 million. So the company has no debt. I always love to see that. So, is the company going to go bankrupt? Is it going to go out of business? By the looks of it, no, it is not. And I actually do like the business model of this company. Now, diving into the financials a bit more granularly, you can see that revenues increased 53% from about 430 million right there to 658 million for the quarter. Very solid stuff. Crazy growth. Now you can see right here, when you look at distribution, transaction, and other costs, which is essentially cost of revenue, that increased 63%. And that is why we actually saw that RLDC, or gross margin, fall, right? Because cost of revenue was higher than revenue. The second you have that, gross margins are going to fall by and large. Now, operating expenses were actually up 338%. And this was largely due to compensation expense right here. Now, that actually is mostly just the IPO costs for the quarter, which was $500 million. However, guys, if you go ahead and actually strip out the IPO costs for this quarter, right, you're looking at operating expenses only increasing 14% for the quarter. However, this is an expense that the company did incur, so you do have to include it. But when you just look at the underlying operating components of the business, and the IPO cost is a one-time charge, the company actually built a ton of operating leverage. They're actually really controlling their expenses really well, in my opinion. And then as a result, because of the 338 increase in operating expenses, we actually saw net income fall by almost 1,000%, as you can see right here, going from 32 million last year to negative $482 million in net income. And that is how you actually get a negative earnings per share. But the business is still flourishing. If you actually look at some of the metrics they gave us on the PowerPoint, right, the presentation, USDC in circulation was up 90% on a year-over-year basis. That nearly doubled. It was close to $33 billion last year. Now it's $61 billion. And USDC are the second largest issuer of US-backed stablecoins. USDC on-chain transaction volume on a year-over-year basis, right, was 5.9 trillion. Just for context, Visa does about 24 trillion. So this is a huge number, right? And then total revenue and reserve income, essentially revenue, up 53% on the year, 658 million. We just spoke about that. And then meaningful wallets that hold more than $10 in USDC is at 5.7 million. That's a lot, right? Up 68% on a year-over-year basis. And what these metrics are telling us is that crypto and stablecoin adoption is soaring, even right now in 2025. Now, we do get a whole bunch of other metrics. Something I do want to point out right here, reserve return rate. So essentially, when you look at Circle's business model, it's very simple, right? They have a digital currency called USDC that you could use to make transactions across borders and that you can use to pay with stuff on crypto exchanges. You can hold your US dollar in USDC, right? And that's backed wholeheartedly by $1 is one USDC. Now, Circle actually go ahead and collect interest on the balances you deposit while you transact with your USDC. So for Q2 2025, you could see their reserve return rate was 4.1% in total. That actually decreased 100 basis points. So they're making a really, really nice return on this right here. However, if we get rate cuts, this number is going to get cut and their revenue as a result is probably going to grow a little bit slower. So their revenue can still grow if their overall minted USDC increases and more people actually adopt the stablecoin. However, the revenue they will be receiving on a percentage basis will actually be less. So that is the risk with this model. It's highly dependent on where rates are, real rates are at the moment. And you can see if we ever get to a situation where the reserve rate of return falls and the company isn't growing, like let's say their USD that's minted, right? You can actually see their revenue fall on a year-over-year basis. Now, there's still plenty of room to grow. Like I said, USDC is the second largest issuer. It's not even the biggest. In fact, the biggest is nearly double its size. That is USDT, aka Tether, and it has $158 billion in stablecoins in circulation. They are an absolute behemoth. And then you can see no one else compares to USDC and Tether, including, I think that's Fiserv's coin, that's PayPal's coin, TUSD, RLUSD, all of these stable coins right here. But there's just two big players and the rest are extremely, extremely minor. Now, when you look at the stablecoin market, it is growing significantly. You could see here that stablecoins in circulation were up 50% on a year-over-year basis. Stablecoin transaction volumes were up 75% on a year-over-year basis. And it actually continues to take market share as a percentage of US money supply, and to officially over 1%. Absolutely crazy. And when you see all of these results, right, it's very easy to see why the stock is up 10%. These are just like crazy results, crazy growth. The management delivered, and they also delivered with their guidance, right? I think the most interesting thing the market is looking at right now is this right here. They gave an outlook, a multi-year look through, right, of a 40% CAGR. So I'm assuming this is probably for about 2 or 3 years. This is what they're looking to grow the USDC in circulation. So like, let's say they're at $60 billion in USDC and they grow it by 40%, right? That means next year they're going to have 75 billion, right? And assuming an interest rate of 3.5%, you could probably go ahead and calculate what their revenue is going to be and then increase that by 40% the year after that, and so forth and so forth. So this is absolutely a crazy growth rate. And you're looking at a company, if it does grow at these levels, right? A company that's going to be doing $2 to $3 billion in just 3 years in revenue. They also have this other revenue segment right here. They're trying to diversify their revenue. They reckon they're going to do $75, $85 million in revenue just from that segment. And they're looking at an RLDC margin of about 36 to 38%. So you can assume, let's say, next year they do 75 billion in minted circulation at a 36 to 38% margin. You could be looking at operating income of very close to 300 million, 280 million, somewhere around there. And just for context, like revenue this quarter was 658 million. So the company definitely growing in a very, very fast way, in a very big way. And I think this adoption of stablecoins is going to continue because we just got the Genius Act. Now, the Genius Act, right, is just some stablecoin regulation, and it's pretty much OCC supervision for large non-bank stablecoin issuers like Circle and Tether. The legislation shows a strict 1-to-1 reserve requirement limited to cash, short duration treasuries, and treasury repo facilities. So they only want bills in this part of the market. They want to see robust transparency requirements with monthly attestations or audits certified by the CEO and CFO, which I think Circle already does anyway. And then mandatory compliance with AML, BSA, and related rules, stringent requirement barriers for foreign issuers, and confirms payment stablecoins like USDC are not a security and reserves are bankruptcy remote. So this is essentially what the Genius Act is. And because this is now officially into law, right, it means that these big banks, JP Morgan, Citi, can all issue their own stablecoins, and the total addressable market is simply going to grow. Now, what is the thesis for something like USDC? It's very, very simple. You're looking at all of these partnerships coming to fruition, adopting stablecoins and using USDC as their go-to regulated stablecoin. At the same time, you're looking at payments being more readily made using stablecoins. Right now, there's 4 active payment partners. These guys right here and 100 plus are currently in the pipeline. So the adoption is coming. And essentially by buying USDC, the thesis is that individuals and people are going to continue to adopt crypto and by extension stablecoins. And this is a way to extract value from that. But where does it leave us with valuation? Now, I was actually really surprised. Circle actually wasn't that overvalued in my opinion. Now, this is essentially what I'm pricing out right here. So looking at the trailing 12-month revenue, right? 1.8 billion. Now, this might be a little bit light because the company did 658 million this quarter, right? Now, if you multiply that by 4, you're looking at anywhere from 26 to 2700 million or 2.6 to 2.7 billion. So you could use that figure, but I'm using that figure in 2025, 2.5 billion. And essentially we're growing this by 33% every single year to 2029. So a little bit under consensus. The actual consensus for Circle Internet Group is like 7.8 billion in 2028. But we're going to use 2029 just to build a bit of margin of safety. We're looking at a net income margin of about 21%. I actually think there's upside to that. I wouldn't be surprised if we see net income margin closer to like 28% in 2029. The reason being, the bigger they get, this is such a margin accretive business, right? And I think the actual street consensus is for about 28% net income margin in 2029. And then you're looking at net income of 1.6 billion. Now we're just going to use a 25 times forward PE, just 25 times. And then you get an enterprise value of 41 billion, subtract the net debt, right? And then divide by shares outstanding. I'm assuming shares are going to increase 5% every single year, thanks to dilution. And then you get a stock price in 2029 of $160. Current stock price is 161, which really goes to show that the $40 IPO was an actual bargain in hindsight. However, at the current price, you're still looking at a projected return of about negative 14%. But again, I do think there's upside to these margins. And ultimately, if the company can grow its, additional revenue, its other revenue services faster and can diversify its revenue streams, there certainly is upside to, the revenue figures into the back half year, 2028, 2029. So is USDC a buy? I would say no, it's not quite a buy. And the street does agree with me. I think the stock is a hold right now. The average price target is about 169, which is about where fair value is. The high end sees 250, the low end sees 80. But for those of you that got in at the IPO, the low end target is still 100% from the IPO price of what, $30, $40? Absolutely insane. When you look at the technical charts, you can see here that there's nothing that we could really say about this. This is when it IPO'd. It IPO'd at $30 a share. This is $300 a share at the high, so it's nearly a 10x. And I guess we're probably going to go retest some of these highs based on these earnings. This earnings report just gave the stock a reason to rally, and I think based on its volatility, it's going to do exactly that. And it's probably going to go ahead and test those highs. But guys, if you've made it up until here, thank you so much for watching. If you like this video, please subscribe, hit the notification bell, as well as the like button, and leave a comment for the algorithm. Cheers.